Well, let's shift to a more national focus, looking at apartment lists, their national rent report for December 2025. And I'm assuming this is all covering mostly November numbers. And it's not a surprise. The median national rent fell 1% in November and now stands at $1,367. This was the fourth consecutive month-over-month decline. And now, as they note, we are in the midst of a market off season. But as they also mentioned later on in the piece, and this also comes back to the apartments.com report that we looked at last week, talking about kind of that change and shifting in seasonality. And there's essentially kind of like a flattening of the curve from that peak leasing season, kind of April through July. We're seeing the leasing season start a little bit earlier, and also kind of after a dip, kind of having a little bit of a surge in Q4. And so this is, while that narrative may still occur, that maybe we're not seeing as strong as declines as we could see, we're still seeing declines in not that kind of Q4 bump. Even though there is some demand we're seeing, at least in our portfolio, anecdotally, it's not leading to a large amount of rent growth.
I think for me, when I was reading this apartment list piece, we've seen the rent growth negative month over month, really for, I think it was, 4 months in a row now? Is that what they just, is that
Yeah.
what you just, 4 months in a row. So the storyline has been maybe repetitive as I've accessed apartment lists and seen this report come month over month. The thing that struck me, maybe with the strongest umph was that the national multifamily vacancy rate at 7.2% is an all-time high, alongside with some rent deceleration or negative rent growth. And so it just speaks to the overall supply wave that we're still battling through. The peak wave of supply is really in our rear view, but we've been talking about it really all week since we were in Miami. We're still not through all of this deliveries and the supply wave. It's so the mix of negative rent growth with increasing vacancies. It's not a recipe for great NOI growth.
No, and you could see how an investor would just not be as bullish on multifamily right now if you just took a quick snapshot of where we are today. You mentioned that the apartment list index for vacancy, it is at an all-time high, and that was a little bit of a controversial data point because there was a couple outlets that picked up on that and were saying it's like apartment vacancy is an all-time high, and that's not necessarily the case. Now, it is true that it's at an all-time high according to Apartment List's index, but the Apartment List index only goes back to 2019. So it's the highest vacancy since 2019, which is certainly a different. It's a little bit of a different narrative because we had higher vacancy back in the great financial crisis, and there have been other moments in history. So you really have to use the census to go back. And Jay Parsons on his podcast, the Rent Roll, went through this specific topic, and really the data sources that have there's only two data sources that really have the history for rental prices, and that's the census as well as RealPage, with the census having the oldest vacancy data. But it is interesting, even that data I think only goes back until the 80s, and we don't really have a lot of apartment multifamily data that spans back. It's all relatively kind of fresh.
35 years of history. That sure beats what is 5 to 6 years of history.
It definitely does. But I don't know, it's just still interesting. It's just that limited amount of information.
Right.
And sometimes when I'm getting a little bit macro, but when we are trying to assess the macro economy, we often will go back and find analogs from history. But we've only had so many recessions over the last 100 and 20 years. Since we have kind of are in this new economic paradigm, since we founded the Federal Reserve. We moved off the gold standard. Eventually in the 70s with Bretton Woods getting onto a pure fiat currency. It's a little bit of an experiment. We only have so much history with that, and we're still learning a lot. It's not like we have 1,000 years of economic history of all these different examples. Right. Even though there's a lot of human history going back quite some time. But yeah, this is. The question is, are we going to see? Is this the Is this the darkness before the dawn? Does it get worse? Do we see vacancy continue to climb? Do we see rent growth continuing to decelerate and go further negative? I mean, we most likely will see a negative print for national rent growth in January. Big question is, in February, do we start to see the growth and how strong March is? Last year, March was the peak of rent growth, which was earlier than it typically is. So March is going to be a big month. And if you're a property manager, you're an owner, March isn't that far away. That's going to be here before you know it. And what are you going to be doing in February to capture that? You better be getting those renewals out if you haven't already.